Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, Intel shares soaring on a $5 billion investment from Nvidia. The two companies will co-develop chips for PCs and data centers, and the investment will make Nvidia one of Intel's largest shareholders. Nvidia CEO Jensen Huang calling this collaboration historic and a fusion of two world-class platforms. It comes as Intel has fallen far behind in the global chip race. It's gotten an infusion of funding from SoftBank, the U.S. government, and selling assets to investors. A moment ago, in an aside, President Trump just saying in the UK, alongside Prime Minister Keir Starmer, that Jensen Huang is taking over the world. Plus, the fallout from the Federal Reserve's rate cut, the key takeaways from the Fed decision yesterday. More cuts than previously expected could be coming this year, but the outlook for cuts next year appear more cautious. Fed Chair Jerome Powell signaling a lot of uncertainty ahead. He'll likely face trade-offs when making policy decisions in the future. And then if you look at the market action, investors are buying this morning, especially in tech, on the heels of the rate cut. We're looking at green across the screen, and investors will get a fresh look on the health of the consumer and effective tariffs when FedEx reports its earnings after the closing bell. Let's get a check-in on stock futures here this morning. We are seeing a push higher after a little bit of volatility yesterday following Jay Powell's press conference. We've now seen things a little bit more solidly in the green, the confirmation of the quarter-point rate cut. And it looks like the Fed's dot plot, the so-called dot plot, their summary of economic projections, mapping out some more potential cuts to come this year. All three major averages pointing to a higher open. The Nasdaq leading those early gains, pointing to a gain of about 0.9% at the open. The S&P 0.5%, and the Dow about 0.1%. And Intel shares are surging this morning after Nvidia announced a $5 billion investment in the company. The two companies will also work together to develop chips for data centers and PCs. Joining us for more, Patrick Moorhead, Moor Insights Strategy founder, CEO, and chief analyst. Pat, you are steeped in these semiconductor companies. You know the history well. You know the product cycle well. What does this mean? I mean, this is a surprise here. What does this mean for Intel? First of all, let's take that part of it.
Yeah, Intel is very straightforward. There's nothing but upside for Intel here. It's net gains on the PC front and net gains on the AI and data center fronts, and no question about it. I think the only question here, I think I was expecting a little bit more conversation about foundry. And while it's true that the x86 chiplets are made by Intel Foundry, I was looking for something a little bit more, maybe a larger deal that said that Intel would be manufacturing NVIDIA GPUs. It's not that it's not going to happen, it just wasn't part of this announcement.
Yeah, and Pat, that's really interesting that you picked up on that, because obviously this has been the big question for Intel and the foundry business, right? It's making chips for itself, but when is it going to get some other clients outside of it? What does this say that Nvidia is not making that part of this agreement today? Does that imply it doesn't have the confidence in Intel's capacity to do so?
I think it's, well, first of all, Intel has a roadmap of foundry, right? They have 18A, and then a year later 18AP, and then what's called 14A after that. And I do believe that NVIDIA is evaluating those different processes and steps, and I do believe there are negotiations that are going on. And by the way, that's not just NVIDIA. I think that's Apple and other companies out there. NVIDIA has loyalty to TSMC, and I think that doing something like this might be viewed as maybe a lack of loyalty, as opposed to, let's say, a lack of Intel not having the technology. I think there are good questions on execution. I think as soon as Intel cranks out its own Intel 18A chips, the first one called Panther Lake, in a few months, I think confidence will absolutely rise. And I do think that we will see some foundry customers sign up with Intel.
And from NVIDIA's side, NVIDIA obviously is not a charity, right? So there must be something in this agreement for them. What did they get out of it?
Yeah, so I think what it does, it gives them optionality. So let's look at the PC side first. AMD is making waves in the PC market right now. They're taking market share, and every single socket that goes in with an AMD CPU and an AMD GPU means that NVIDIA might not be part of it. NVIDIA still owns the higher end of the GPU market, but what this does is gives them an extra added competitive boost here, another option that might be able to better compete, quite frankly, with Apple, where you have super high-end GPU and an optimized CPU from Intel that runs x86 software, which is really important right now, where most games, most pro developers are x86 and instruction sets. So it gives them potential upside there. It really is about optionality. I did talk to sources last night who told me that the NVIDIA roadmap is not going to change, which means that they will have both ARM and Intel options out there for their end customers, for the hyperscalers, for enterprises, and people like that. I do think, let's say these new products come out in 2.5 years from now, it might lead to confusion. But listen, one person's confusion is another person's optionality, and whether you want to pick Intel or whether you want to pick ARM for the CPU, all things equal, more options are better for end customers.
Pat, to take a step back for a moment, I was just looking at some historical charts of the two this morning. I was looking at market cap of Intel versus Nvidia. I was looking at quarterly revenue of Intel versus Nvidia. And it is just remarkable, the path. I mean, here's the market cap. Intel's kind of been bumping along there for a while. Nvidia obviously took off when its revenue took off and its forecasts took off. But, you know, Intel was the giant for so long. And now Nvidia is so dominant. I'm just curious for your sort of thoughts and perspective on that, for, you know, having covered this industry for so long.
Sure. And, I spent 11 years at AMD and I saw the ups and downs. And what happened, three things happened. First of all, Intel lost the plot when it came to foundry and foundry technologies. And what that did is that gave AMD the potential to go in and work with TSMC with more modern types of architectures that are used in the industry today. And then you had the AI boom, which the dollars of revenue, the CPU market's not going down. But what happened is the AI GPU, the AI accelerator market absolutely took off. And what Intel did is they missed the data center AI boom related to data center GPUs. And, which is surprising. I mean, the company had a design called Larrabee that didn't work out. They had their own. They made two acquisitions of companies, and they do have in market a product called Gaudi 3 that's very competitive on specific workloads. It's very similar to the accelerators, homegrown accelerators used by the hyperscalers. But and let's say a couple $1 billion of revenue, but compared to the hundreds and billions of dollars of revenue that Nvidia is doing, they missed the market takeoff. And it doesn't say that people at Intel don't understand or they're not technologically advanced. Mm-hmm. Doing GPUs is very difficult, and this is why Nvidia is ahead and AMD is a distant second in terms of market share. These companies have been doing GPUs for 30 years. Right. This is difficult tech.
Yeah. Difficult tech, and one that obviously Nvidia hit at the right moment as well for this AI moment that we're in. Pat, thank you so much for joining us. It's always great to get your perspective on this stuff. Appreciate it.
Thanks, Julie.
Now let's dig more into our top stories of the day. Nvidia announcing these plans to invest $5 billion in Intel. The Federal Reserve cutting interest rates by 1/4 point and signaling 2 more cuts to come this year. That decision sending futures higher. And we're watching global central bank decisions overall as the Bank of England holds rates steady. Joining me now to talk about all of this, senior reporter Ali Kanal live at the NASDAQ, Fed correspondent Jennifer Schonberger, and Morning Brief Markets Sunrise host Ramzan Karmali live from our London studios. And Ramzan, so we just heard President Trump Trump speaking alongside UK Prime Minister Keir Starmer on Nvidia and AI more broadly. This is what he said.
We're taking the next logical step with a historic agreement on science and technology partnerships, and this will create new government, academic, and private sector cooperation in areas such as AI, which is taking over the world. I'm looking at you guys. You're taking over the world, Jensen. I don't know what you're doing here. I hope you're right. All I can say is we both hope you're right.
So, Ramzan, watching what's been unfolding there in the UK, all of these investments, talk to me about the UK perspective on what's going on there.
So it's really interesting. President Trump, he came to the UK and he didn't come alone. He brought the titans of tech with him. At the dinner yesterday, there was a lot of pomp and pageantry, and the state dinner with the king. Tim Cook was sitting 2 seats down from the Queen. It beggars belief that this could be happening right now. So Tim Cook was there, Jensen Huang was there, Sam Altman was there, and these guys have signed massive deals. Microsoft signed a $30 million deal. That deal that Keir Starmer and President Trump were signing is worth $42 billion. Now, interestingly, Jensen Huang himself, yesterday, when he was interviewed by reporters, he actually did say that the UK had the potential, not quite there yet, to become an AI superpower. The thing that's holding the UK back is AI infrastructure, which obviously is it's a massive deal. If you don't have the infrastructure, AI is not going to get anywhere for you. And that's what he was really trying to hammer home, that point, that the UK is in a good position, but it needs that infrastructure to really take it to the next level.
If only you buy billions and billions of dollars of my chips, then you guys will be in a great position, right, Ramzan?
Well, exactly, and he's going to deploy 120,000 of those chips. That was part of the agreement as well. So yes, that's exactly what he's saying. You need my chips to get AI to the next level, the UK needs this investment. The UK's economy is, in July, the UK economy didn't even grow in July. Over the 3 months to July, it grew 0.2%. So the UK needs to get the economy growing, and the UK government, led by Keir Starmer, believe that AI is the way forward.
And certainly, we're already well along the way here in the United States as well. And Ali, if you look at stocks this morning, yes, we're seeing some Fed reaction. We just saw Nvidia shares up 2%, which also doesn't hurt matters. So we could look like maybe we've resumed the sort of record march that we've been on.
Yeah, Chair Powell delivering that risk management cut at a time when stocks are trading at record highs. And according to a lot of the Wall Street commentary I've been parsing through, this positions markets to potentially go even higher. Truist strategist Keith Lerner out with the note saying that when cuts come near record highs, the S&P has been higher 90% of the time 1 year later. And to that point, the expectations of Fed easing, that's fueled a lot of the bullish calls that we've seen across Wall Street with various firms like Wells Fargo, Deutsche Bank, Barclays, among others, all raising their respective S&P targets. But the path higher likely won't be without volatility. Citi, for example, said that the S&P is currently fairly valued at its 6,600 price target. Evercore ISI warned that tech volatility has nowhere to go but up at this point, and that tension is really showing up across various areas of the market in different types of ways. So you saw the US dollar index, for example, after that Fed rate cut, bounce off of its 3.5-year lows. It is now moving higher. That pressured metals, so gold, pulling back from those record highs as some traders booked some profits. We also saw silver fall over 1%. Copper slipped around 0.5%. And in crypto, risk appetite returning there. Crypto was able to recapture that $117,000 a coin level. This sets up what strategists say could be more momentum, maybe another bull run for crypto. They're eyeing 118 to 120,000 as key breakout levels there. So bottom line, we've seen this reaction across stocks, across various assets, and it does serve as a reminder here that the Fed has a big impact on markets. But to your point, Julie, I do think some of this Nvidia news could definitely juice things as well.
It doesn't hurt. Jen, let's get to you. And now that you've had some time to sort of digest the Fed commentary, the press conference, along with the markets here, what stood out to you from yesterday?
Yeah, Julie, it's very clear that the balance of risks is shifting away from tariff-induced inflation towards the labor market. And Fed Chair Jay Powell said flat out that is what drove the rate cut yesterday. He said that officials really were looking at the fact that we've seen a drop in supply of workers on account of lower immigration, but at the same time, a drop in demand for workers. And he labeled the cut a risk management cut, saying that we're now seeing jobs being created at a level that's not keeping up with the population growth. But that was an interesting characterization to me because officials have penciled in 2 more rate cuts for the rest of the year. That means another rate cut at every meeting for the remainder of this year, which would imply that there is serious concern about the job market. Yet you heard Chair Powell in the press conference saying that we're going to be looking at the data. We're going to make decisions meeting by meeting. The interest rate projections are certainly not a forecast. We still want to be restrictive here. And there was not conviction to cut by 50 basis points. For us to move in larger chunks, it would need to be more of an emergent situation where we need to pivot quickly. So to me, that came off as quite hawkish, a bit of a juxtaposition from what we saw in the policy statement and the dot plot.
And Ramzan, just quickly here, the Fed not the only central bank making a decision, even if in the case of the Bank of England, it was a decision to not do anything.
Yeah, and it was so unsurprising, I can't tell you. So yeah, they kept rates on hold at 4%. I told you about growth being one of the issues here, but inflation is particularly sticky at 3.8%. So it was no surprise rates kept on hold. In fact, there was a bit of a warning from the governor of the Bank of England that actually the path downwards would be gradual. Also quite interesting to note that you might remember back in 2000, during the financial crisis of 2009, the Bank of England started buying a lot of government debt. Well, it's been reducing their holdings. It peaked at 875 billion in 2022. They've been reducing it, offloading about 100 billion each year. Well, they're reducing that rate of offloading to 70 billion. And why? Well, it's because they're trying to curb against rising bond yields. And now this is quite important for the UK Finance Minister, as we call her, the Chancellor, Rachel Reeves, because she's going to be delivering her budget in November and she's got a big hole in her public finances. So obviously with higher market interest rates, she'll have to pay more to service those debts. Also, don't forget that tomorrow we get an interest rate decision from the Bank of Japan as well. Again, not expecting a change. Their rates to be kept on hold at 0.5%. That would have been a very different story back in July when the US and Japan signed that trade agreement. But now, because there's political uncertainty in the country, it's more likely that rates will stay on hold there at 0.5%.
Interesting. All right, Ali, Jennifer, Ramzan, thank you so much. Coming up, we're going to count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We are watching Novo Nordisk, Alphabet, and GE Healthcare. First up, Novo Nordisk. Those shares are jumping after the Danish company said a study showed its Ozempic drug reduces the risk of heart attack, stroke, and death by more than competitor Eli Lilly's drug. It was the first head-to-head real-world study for the drug against Lilly's Trulicity. Meanwhile, a late-stage trial result for its once-daily obesity pill showed what it said was significant weight reduction and tolerability in line with its blockbuster Wegovy injection. Next up is Alphabet. The Financial Times reporting China has decided to end an antitrust investigation into the dominance of Google's Android. It marks a win for the company as China is the world's largest smartphone market. China's dropping the probe just as Beijing and Washington are engaged in delicate negotiations over trade. The FT is reporting the Chinese government is more focused on Nvidia. And finally, GE Healthcare, it is reportedly exploring a stake sale in its China unit, according to Bloomberg. A potential transaction may value the China assets at several $1 billion. A representative for the company declined to comment on the story beyond saying that the company remains committed to serving patients and customers in China, which is one of the world's largest healthcare markets. Shares of GE Healthcare have slid 2% this year, valuing the company at about $35 billion. The shares slightly up this morning. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, markets are looking to open higher following the Fed's rate decision potentially resuming its run of records. The Fed largely in agreement with expectations for 2 additional cuts in 2025 and 1 in the first half of 2026. Here with more on what that means for markets, what he's watching, Chris Versace, Tematical Research Chief Investment Officer. Hey, Chris.
Hey, Julie.
So now that we've had some time to digest the Fed, what stands out to you and what are the implications for stocks?
Well, the market was looking for 6 rate cuts by the end of 2026. The Fed didn't say that, but it did give us 1 more. And I think the comments that Jennifer Schomburger made a few minutes ago about, the growing importance of the labor market are spot on. And I think what the Fed telegraphed is we're going to look to get ahead of this to the best that we can, but also do a little catch up given those revisions that we've seen and those massive number of jobs that were pulled out with that big revision that we saw through the 12 months ending in March.
I mean, how concerned are you about the labor market, right? Because as we know, if the Fed is cutting, and even if it's trying to get ahead of it, if it's doing it because it's worried about the labor market, there is a risk to the economy that even with it cutting, we're still going to see the job market deteriorate.
Yeah, so I think what you're getting at is, isn't there a time lag between when the Fed cuts and we actually see the benefits of those cuts? Absolutely true. So, but here's the thing. When we look at the preponderance of economic data so far, and I have to be careful, so far, the economy is in pretty good shape, right? The Atlanta Fed GDP Now model, 3.1% after yesterday's housing numbers. We look at 2.1, 2.2% for the New York Fed for the second half of the year. Consumers are spending. So, by and large, the economy is good. It's really the labor market that's kind of an issue, and I think that's what the Fed is hoping to address.
Okay, so here's my big question for you. You're a stock picker. You look at where you're seeing opportunity right now. Are you changing sort of your models and your screens as the Fed starts to cut?
That's an interesting question because the setup for that is we've had a tremendous run in the market, right? And I was saying to folks that, wow, the NASDAQ composite going into the Fed meeting was classically overbought with its RSI level. S&P 500 was close, valuations were stretched. So for me, the whole thing now is about earnings growing going forward, and preferably faster than the S&P 500. We've always tried to lean into those companies with demonstrative tailwinds and faster earnings growth. And we are starting to look at some areas that have pulled back, certain stocks that have fallen out of favor, but still have very favorable drivers behind them. And in some cases, because of the rate cutting cycle, we are warming up to some REITs and other things.
Okay, so let's do kind of a lightning round here. We don't have much time left, but you were talking about 3 stocks in that category: OLED, Dutch Bros, Welltower.
Which one you want first?
Just do them in order. Why not?
So I can't remember the order, but Universal Display, they are one of the companies behind the organic light emitting diode technology. We're seeing this get adopted increasingly in smartphones, tablets, other end markets, and the push to foldables increases the surface area for the display, driving more need for their solutions. Dutch Bros, west to east coast, classic expansion story. Companies on track. And when you see stocks like Darden, having a tough time, or their fine dining falling, Olive Garden exploding, people are still going to continue to eat out, but I think they're shifting towards more affordable experiences. Dutch Bros lines right up with that.
And does Dutch Bros continue to sort of eat into Starbucks, or?
Great point, because their price points are actually lower than Starbucks. So I think that is absolutely what can happen. The only thing I wish with Dutch Bros is that the management team, not that they would be more promotional, but they would be more engaging, sharing their milestones as they continue to expand their footprint.
And 20 seconds, Welltower?
Silver tsunami. Shortage on senior housing, REITs back in play, rising dividend.
You know what you're doing. Thanks so much, Chris.
Thanks,
It's great
Julie.
to see you. That does it for Morning Brief. Opening Bid with Brian Sassi is next on Yahoo Finance. Don't go anywhere.